Hey, how you doing? And welcome to Livewire Markets. I'm Ali Selvi, and today we're very lucky to be joined by stock whisperer Rudi Filapek-Vandyck from FNArena for his outlook on the reporting season this August. Thanks so much for joining us today, Rudi, on very last minute notice, I might add. Thank you again.
I like the label though. I'll start whispering now.
Okay, I hope not. I want people to be able to hear you. There's a lot to be aware of this August reporting season. We've seen so much volatility in the last week alone. Maybe we just step back a little bit before we get into all the reporting season content. How are you making sense of everything we've seen in the last week?
We haven't even started yet, genuinely.
Yeah.
My view is very simple. If stocks sell off for non-fundamental reasons, that's most likely to be an opportunity. Everyone talks about recession fears in the US. I'm not so sure about that one. I think it's more to do with the carry trade in Japan. Clearly, some people have been losing money. That affected equity prices across the globe. I think, therefore, the bias is towards more opportunity than risk. Having said so, if you look through history, when we get these heavy sell-offs, and it's all about sentiment, of course, insecurity all of a sudden pops up. People get afraid. People have lost money, at least in the short term. So the recovery, so to speak, tends to come in phases. And what usually happens if the pattern from the history repeats is we get a big sell-off, then we get the relief rally, and we get another sell-off. And so we probably haven't seen the end of it. But if we don't get a recession in the US, the upside should outweigh the downside.
I would agree. We haven't seen like a correction or anything. And we're definitely not in a bear market in the US or Australia either. So I feel like there has been kind of way too much fear created over the last week and a bit. We have seen volatility spike a ridiculous amount, like more than 100% over the last week. Would you be holding on to your cash right now? Would you be putting some in the market or just, waiting a little bit?
It's very difficult to wait for things. I still think that if you can pick the bottom in stocks, fine, go for it. Do you really need the bottom? I mean, amongst my references from the past I always make, I've seen people fretting about buying Wesfarmers shares at $30. They didn't quite get there. Wesfarmers is $70 or maybe $60 now because they're sold off. But you're fretting at $30, and you don't have the shares when they reach 60. I've seen people fretting about only buying CSL if they go to 20 or lower. They haven't gone there, but they are $300 now. So in the same view, it's not so much about picking the bottoms. I guess it's about getting on board when opportunity presents itself. And I think opportunity here is more widespread than people realize, because before, in particular after another strong July month, there might have been concerns about valuations. Well, those concerns obviously should be less now. We've had the deflation now. So I still remain of the same view, depending on what type of investor you are. But I always recommend investors have a wish list of stocks that they really, really want to have for the long term. And on occasion, they can't buy them or they don't have them yet because they constantly fear that they might be overpaying. But when things like this happen, that's opportunity then. Those stocks do sell off.
We'll get into some of those wish list stocks later on, but I want to talk about the August reporting season now. Analysts haven't painted a pretty picture for the next month. They think that earnings are likely to drop and then rebound in FY25. Do you agree with that narrative?
Well, it's very difficult to not agree with that narrative because one of the two sectors that really weigh on earnings, believe it or not, are the banks.
And the miners.
The miners and the energy sector. So, but if you strip them out, a lot of other sectors are doing fantastically. And the proposition that you just painted, even without the three sectors that are weighing on earnings, that's the dilemma for investors now. And I think because markets have been driven so much and so strongly by narratives, that this reporting season will prove very, very important, I think, because those narratives are either going to be confirmed or they're going to be denied. And people usually look only from one side on the share market, and the ruling narrative is, a lot of stocks haven't participated in this rally, so their time will come now. And that's, I would guess, small caps, value stocks, cyclicals. But apart from the macro picture, with recession or not recession, liquidity, all of that, if earnings don't confirm that thesis and management teams can't quick up confidence for the year ahead, that narrative will fall flat. And it will fall flat quite decisively, I think. The other narrative, of course, is that there are sectors out there that have enormously strong momentum. Gen AI is one of them, the fourth industrial revolution. There is a narrative out there that everything has gone a little bit too strong, too fast. Is that the case? I mean, we will see the evidence in August. But one of the things I notice is NextDC just announced new capacity or coming on board. Analysts are still tipping Goodman Group for an upside surprise in August. So again, you can have that narrative, but if they prove the opposite, then that narrative is not coming to pass. Two other narratives that are very important this season, and they will be put to the test, is one is consumer spending is more resilient than we give it credit for. Let's see. All right, the companies will have to come out and will have to prove that the consumer is not going into hibernation and is still spending money. The other one is, and that definitely has my attention personally, is the revival of the healthcare sector. I mean, is the healthcare sector in Australia was the best performing sector for 2 decades, pre-GFC, pre-COVID, I should say, and post-COVID, almost the worst. The energy is the worst one, but healthcare was up there as well. So has healthcare's time now arrived? Well, ResMed's result was fantastic. So good vibes already. Let's see what Cochlear comes out. Let's see what CSL comes out. Equally important, I think, and this is what makes this reporting season less straightforward. It's not so much about those general themes. It's not so much about those sectors here. I recently summarized the season as its divergence and polarization. And not so much between the winners and the losers, but also in sectors. Like, for example, if the healthcare sector does make a revival here, bravo, but maybe not Helios, maybe not Sonic Healthcare, maybe not Nanosonics, and some of the other names. So I think investors are going to be surprised by how polarized outcomes can be in the same sector. And that's going to be the challenge this season, I think.
Some of the names you mentioned there are kind of those out-of-love stocks. Are you saying then that the stocks that the market loves will continue to be supported by the market, and those that are out of love will continue to be hated, I guess, by the market or avoided?
I think because of the polarization and the divergence, I think it will be a bit of both. I think what you will see is that some of the stocks that have been previously loved, they will come out and basically say, like, listen guys, the love was for the wrong reasons. Yeah? And we will notice that. We've already seen Alternate coming out with a very disappointing outlook. And that's example number one. I mean, it happens. And before you know it, there's a big hole in the portfolio. On the other end, I'm not the type of investor who goes rummaging through the lower end of the market and tries to find some value there. What I do notice, and we've seen now with the market update from Ramsay Health Care, that companies in trouble are not necessarily out of trouble just yet. And the bad news flow is not necessarily coming to an end because the share price is at a 10-year low. I mean, optimistic view, the share price didn't tank from Ramsay. So you could argue, it's been low now, it's low. There's nothing happened for 10 years. So you could argue maybe the share price is near bottom here. But then the opposite is, but does that mean then that apart from the occasional flaring up of some positive momentum and a little bit better balance sheet and for a company like Ramsey, does that then mean that we have a company now that is going to perform for the next 3, 4, 5, 7 years? I would argue probably not. So that then means if you come into the reporting season, you have to decide what kind of investor are you? I mean, I have no doubt value investors are sitting on Lendlease, Ansell, Helios, AMP, Ramsey Healthcare, the Star Entertainment Group. But are they literally out of problems? Are they looking forward to that revival that we are foreseeing in the earnings forecast? I'm not convinced about that. And even then, I'm more looking on the upside. I think that if we had concerns previously about the Goodman Group, about Hub 24, about the WiseTech, REA Group, Macquarie, those stocks, and some of those concerns, man, for the short term, yeah, I mean they were valid, but share prices have pulled back now. So now I'm actually getting interested. I mean, I'm thinking like, ooh, where am I going to put more money?
I want to stick to stocks that you're a bit worried about.
Mm-hmm.
You mentioned a few classic value names there before. Are there any stocks, maybe only 3, that you want to point out that you think investors should really be careful about investing in, or just being close to this reporting season?
Generally speaking, I am always very concerned about companies that repeatedly come out with bad news. And Ramsey Healthcare would be one of them. Another one would be Lendlease. Another one, unfortunately, I think, is Ansell. And there are more. These are just the ones that immediately spring to mind, because there is something to be said that when the news flow continues to be negative, then there's more at hand there than. I mean, previously in February I mentioned Bapcor. Well, haven't they come out with some bad news since? I mean, that wasn't quite pretty. So I'm always looking for that particular type of signs, and that equally goes for companies that are on a roll. Maybe in hindsight, some signals were there that Alternate wasn't going on all 4 cylinders anymore, and that's why I think as investors you have to be very mindful of companies that miss expectations. There's always an excuse to miss, and sometimes yes, it's just that, but sometimes there's more at hand. That's why we have to be careful. I think on both parts of the markets. Yes.
Yeah. Okay. Before we talked about Ordinate, its share prices sold off about 40%, and you also talked about other stocks before where, we've seen some volatility. Their share prices have pulled back a little bit. Where are you seeing the most value as we head into the reporting season?
I'm still a big fan of stocks like ResMed, CSL, Cochlear, WiseTech, REA Group, Car Sales, now Car Group. I think those companies they're just strong companies. Structural growth is there. They continue performing. If they miss one reporting season, more likely than not, 12 months down the track, the share price is higher. I'm still a big fan of Technology One, Aristocrat, but they don't report in August. But again, latest signals of those companies have been very, very strong. The fact that they don't report in August doesn't mean the share price hasn't come off. So I'm very much still concentrating on those companies. One company maybe to highlight is last time we were in an interview, I was a little bit downbeat on Telstra. In the meantime, that's how life goes. They've actually come out with some good news flow, and they've increased their prices. So arguably, I mean, I still have the view that Telstra will never be a fantastic investment just because of the business it is. But it's probably but fair to say that it's not as downbeat as I sort of might have intimated last time. And actually, I've gone through analysts' reports, and some of them actually tipping Telstra for a positive surprise in August. So prove me wrong.
Another area of the market that's been really downbeat has been resources, except for gold, which has done fantastically well. Analysts believe that resources or miners could really lead the earnings charge for FY25. Do you see that happening?
First of all, gold miners have been a minefield, and that's because there's more to the business than just simply getting gold out of the ground. Costs, investments, capex, margins, all of that. So it has been very much flimsy when it comes to gold miners. The resources I tend to focus less on because it's much more macro driven. I mean, it's very simple for most resources stocks, whether they disappoint or prove that the doubters wrong in August. It doesn't matter if resources prices start trending up in the second half, then the share price will go up basically, unless you're a gold miner and you have to deal with too many costs. But I'm not a big fan of investing in resources. The easiest way to put it is you buy them when they're down. A lot of resource stocks are down at the moment. But having said so, I think people went too easily into resources earlier as they did in small caps, because we still have that question mark, which apparently is now also weighing on markets. If we do get a recession in the US, or we do get more disappointment from China, those share prices will go lower, and they should go lower. So buying cheap is not necessarily the road to wealth here, not in the short term. But I do think ultimately, if economies are on better footing in 2025, and they should be, then yes, resources, small caps, they will make a comeback.
I want to end the interview on something positive, something exciting. I want to know if you could only hold one stock this reporting season, and it can't have reported already, what would it be and why?
Well, it can't have report. Well, I'm going to be very boring because I'm a big fan of CSL, and I think CSL's time is coming again. I mean, on some calculations, and they're not that outrageous, share price should be on its way to $400, if not $500.
Wow.
It's 300 now. I mean, the skepticism will say, but the share price hasn't done anything post-COVID. True, I mean, but that doesn't tell you anything about the way forward. And I do believe that if we go through a tougher time, which we are now at the moment, and the only thing they have to do is just come out, do the same thing as ResMed does. We have strong momentum, the margins look okay again. I think the market will embrace it again.
Okay, well, thank you so much for your time today, Rudi. It was an absolute pleasure to speak with you today.
My pleasure.
If you enjoyed that too, don't forget to subscribe to Livewire's YouTube channel. We're adding so much great content just like this every single week.